using candlestick for confirmation. Now, in this video, I'll teach you guys how to be able to tell the difference between candlestick strengths and weakness. By the end of this video, you should have mastered how to use candle for confirmation, for directional bias, and also to understand if the market is bullish or bearish. You see, one thing that most of you don't understand is that candle confirmation is very, very important. Most of you just start trading, you didn't even learn about candles, you didn't even take your time to want to understand what each of these candles mean. You just learn support and resistance, supply and demand, SMC, ICT, and boom, you think you're a profitable trader. As someone who wants to make good amount of money from the market, you need to understand how candles work. Imagine you driving a car, your steering, your brake, and every other things you see on that dashboard are the language that you need to interact with the car. Same thing with the market. You need to understand all these candles for you to be able to utilize this market properly. Now come to this side here. Look at this candle. Right? You wouldn't compare the strength of this candle with this. If you look at these two candles properly, one has what? A high momentum. And the other one have what? A low momentum. Do you understand? Now, what do I mean by that? When you're able to tell the difference between a candle with high momentum and a candle with low momentum, trading becomes easier. Because that high momentum candle, meaning those candles that are very big, these big candles you see on your charts, these candles are telling you that what? There is influx of buyers and sellers. Compared to these smaller candles, those smaller candles tell you that the buyers and sellers are starting to leave the market. You need to understand that the knowledge of candles makes you trade the market faster, makes you understand the market better, makes you know when to buy, when to sit out, and when to sell. Now, let me give you guys a few examples. Now look at this candle here. Okay. Let me bring out something here. I think there's a network issue here. All right, so just let's use this candle as example. Now look at this candle. Look at this candle. Okay. Look at this candle. Then also this other candle. Now let me shade this one. Now this one I'm shading could actually be a red candle. This is a green candle. This other one, a green candle. This one, a red candle. Okay? So now me shading them, it means this is the bearish candle and this is the bullish candle. Take notes. Now, what's the difference between all these candles and how do they relate in ensuring that you understand where the market is heading to? Now, take for example, a market is bullish, right? Or let's use this instead. Your resistance and support. A market is bearish. Then it gets to this zone. Now, immediately it gets to your support. There are certain candle formation you want to see that would help you to understand that, okay, this market is bullish, or okay, the sellers are still in control. Now, what is that candle? This. Immediately the market gets to your support and it forms a new candle that looks like this. What is that market trying to tell you? Buyers are coming in. Now, how did you know buyers are coming in? Because this is a full body candle, same thing with this, but buyers have pushed this candle to this position here. That is why you see this long wick, because they've pushed the candle to the upside. So that is indirectly telling you that what? There's an influx of buying opportunity coming into the market. And remember, for that influx of buying opportunity coming into the market to be valid, you need to look at where it happened. It happened at the support. Take notes, whenever a market gets to the support and you see an influx of buying pressure, that is when you should know that this market is preparing for what? A shift. Very important. Then what happened? Should you jump in and start buying all of a sudden? No, you wait. You don't jump in and start buying, you wait. What are you waiting for? You're waiting for the market to create another candle. Now, if the next candle goes above this candle, that is this candle that was formed, if the next one closes above it, automatically, you should start looking for buy. As simple as ABCD. Market gets to the support, gives you an influx of a hammer candle. This formation is called a hammer. This candle pattern is called a hammer. You can call the candle a hammer, you can call it a bullish candle, whatever you want to call it. Just understand it, okay? My students know the perfect name for it. And if you want to learn how to interpret candle like a pro, make sure you don't miss the September online class coming, okay? So now, immediately the candle closes above here. Good confirmation for you to take a buy, all right? Very good confirmation. Now, that's by the way. Secondly, let's say a market is actually selling, okay? Let's say a market is actually buying rather. Then it gets to the resistance. Then what happened? You see this other candle again, okay? You see this other candle form here. What is that candle telling you? The buyers that were buying this market, they are getting tired. And once they start getting tired, what happens? Sellers come in. And how would you know sellers have come in? This candle. Why? Because this pressure is telling you that what? Sellers have pushed the market to the downside. So what do? You wait for another candle to form. And if the candle is able to close up below that candle, full confirmation for a sell. Then what are the advantage of these two big candles? This is a bearish engulfing candle and also a bullish engulfing candle. Now, how do they work? When this market have started moving, then you see those two candles form here. The market is telling you that sellers are still in control or buyers are still in control. Remember, the amount of wick you see at the bottom of a candle tells you the amount of pressure coming into that market. But when you now see multiple wick rejection on different candles, it simply means there's a liquidity resting on that bottom. Don't forget, what do I mean by that? You see this, you see this, you see this. Now we have like 3 weeks. It means what? There's a liquidity resting here. And you need to be what? You need to be very, very careful so that the market won't end up what? Sweeping you out. Now let's look for a few examples. Now look at this chart perfectly, right? Now this is your support. This is your resistance. Remember, for a support and resistance to be valid, the market must test it how many times? 3 times. Now see this market tapped into our support here. This is the daily time frame. Then the market pushed up, came back here, pushed up, came back here. Now let's scale down to the 4-hour time frame so that you can actually get a perfect representation of what's happening. Now this is the 4-hour time frame. The first thing we want to do is to ensure we reduce the charts so we're able to tell what is happening. Now see what happened immediately the market got to this zone. Remember, this class is all about candles, understanding why every candle forms and what they mean. See what happened here. Immediately this market tapped here. Firstly, this market was selling with huge bearish candle. Can you see how the candles were getting smaller? Meaning if this one was 50%, this one is 40, this one is 30, this one is 20, this one is 10. Can you see how the candles started getting smaller around this zone? What is that telling you? Exhaustion. What do I mean by exhaustion? Sellers are getting tired. Then immediately the candle tapped into the support. Immediately the candle tapped into the support. What happened? Buyers entered. How did you know buyers entered fully? This huge big green candle. Now whenever you see a huge bullish candle on the support, wait for the market to come back and test the 50% of that support. That huge big candle that was formed, wait for the market to come back and test the 50%. Once the market tests that 50%, is a good confirmation for a buy. And what happened? The market went up, created what? A continuation pattern to tell you that I am still bullish. Then what happened? A push to the upside happened. Okay, that's one. Now let me show you guys another example. Number 2, see what happened here. Immediately the market was getting close to the support. What happened? Sellers stopped here. Then buyers entered fully. Immediately the buyers entered fully, what happened? There was a wick rejection here. Now, this wick rejection is giving you full confirmation that the only time where this market will be considered bearish is if the market go below this wick. But so long as the market continues to struggle above this wick, it is forever what? Bullish. And what happened? The market went up, came back to test that same zone, then continued pushing to the upside. Then now, see this other side here. Immediately the market was coming close to the support. A big bearish candle closed below it. The market pushed back up. Buyers wanted to come back. Another huge seller candle closed below it. What would you start doing in that situation? Start what? Looking for a short sell down to this zone before the market created what? An inverse head and shoulder and reversed back. In essence, candle helps you to understand why this is happening, why that is happening. And I pray you watch this video, you learn from it. Remember, we're snipers. We don't rush the market. We wait for the market to come to us. Peace.